And we're live. Back-to-back birthday weeks. How did that even happen? I love it. Happy birthday, Frank. What a wonderful day. Our
Thank
second
you.
episode in a row with a birthday in it. Isn't this wonderful? All right, let's turn off the music. We got some complaints about that last time, but we got to get in the spirit. When we have the rare time when we're talking about value investing live for you all on a birthday, got to celebrate a little bit. So happy birthday, Frank. And yeah, what are we going to talk about today? We were talking about our best ideas on last week's wild episode on April Fool's Day, which was a fantastic time. And we started talking about serious best ideas at the latter half of that. So we'll continue that. We saw the news with Warren Buffett revealing he has a big stake, or not really big by Berkshire standards, but big by anyone else's standards, a stake in HP. So we'll talk about that as well. We'll take a look at your questions as well in the chat when we go through some of those things, and obviously have questions about what we're talking about. When we're talking about that, we'll do our best to get those involved. Otherwise, like, comment, subscribe, all that great stuff. Check out the great links in the description to a number of things. The Discord, we have our affiliate link to Seeking Alpha, where you can get a discount on their premium subscription. And that would also go a long way towards helping out our channel. And then also towards ShareSite, where you can track your portfolio. And you can also take a look at the Punch Card portfolio. And I guess we got to get a new link for the Punch Drunk portfolio that we made last week as well. And you can track our portfolio there. And of course, you can track your own there as well with a free account. Or if you use our link, you get access to a discount on their premium subscription for the first year. You get a few months free. So check that out as well. That would also go a long way towards helping out the channel. And Tom just messaged us in the chat. He will be there soon. So Tom will be on shortly. I think he's out house hunting again, and he was out house hunting, so he'll be back shortly. All right. Where should we start? Should we defer to the birthday boy? Where do you want to start, Frank? I don't think you gave your best idea last week. Do you have a best idea waiting for us, ready to go?
I do. It's a very new idea. I actually only come across it yesterday, and I've been reading about it a fair bit since. And it's getting seriously interesting pretty quick. But again, it is early stage of the research, so I'll give a bit of an overview and see what people think. The company's Opera, which is about a $600 or $500 million company. You might want to pull it up on ticker if you can, just because some of these numbers.
Is it an Australian company, Frank?
No, that's US. Oh, it trades. So it's all over the shop. It trades in the US, operated in Norway, and the 60% owner is Chinese. So,
wow.
Part of the reason that it's
What's
probably
the ticker?
OPRA. So part of the reason it's probably undervalued is 60% ownership by a Chinese owner, which some people consider a risk. I probably don't so much, particularly with the company not operating in China, takes away some of that risk. It operates all around the world, a lot in Africa actually, but it's essentially an internet browser, similar to obviously the ones we know well, like the Google Chrome's, Firefox, Safari, all of those things. But it's more of a niche product. It kind of differentiates itself and makes a better user experience. Whereas a usual browser, I guess, appeals to a broader audience, and they have to kind of make it easy to use, all of those things. This really adds some extensions in there, like a built-in VPN. They have messenger type functions, and a range of different products that really make it specific to probably more tech-savvy type audience. They also have different types of browsers. There's one that operates on far less data, which is why it's valuable to the African market, where they don't have cheap internet like we do. But the appeal to it, there's a lot of moving parts to the business. So it makes up, there's a lot of different operating businesses as well as some investments that they have made. And kind of hidden within is this underlying value that I think a lot of the market's probably missing. So they have 3 major investments. And if you put a value on those, they're probably worth conservatively, I would say $300 million, which is around half the market cap. I've seen estimates by other write-ups online that say it's worth more than the market cap just with the three investments. So you'd get the operating businesses completely for free, that browser business. I would probably not be so bullish on those holdings. So I'll say maybe it's worth half the market cap, which means you get this operating business of a fast-growing SaaS business essentially for about 2 or 3 times EBITDA. You do have to do some normalizing of numbers there. They have been reinvesting a lot back into the business. But I think it's a really, really appealing business. They're also buying back $50 million worth of shares in the upcoming year, which they've done in the past as well. And that's like an incredible amount of the actual publicly traded float. So 60% ownership by the Chinese owner. So of the $600 million market cap, I guess is about 200 or less being publicly traded, and 50 million of those are being bought back. So it is a really interesting prospect. The insider owner doesn't come up there.
Yeah, I see that.
I've got his name here if you want to pull him up. His name is Zhao Yui. That's the pronunciation.
Right here?
That might be the name, yeah, but that's not the complete ownership.
Interesting. So I wonder why we're only seeing some here, but okay.
I think
But
that's the problem
60%,
with Ticker. That happens a lot on Ticker with the inside ownership filings. I guess because it hasn't been in a filing somewhere. But I'm not sure exactly how that works. It was also pre the IPO, which was only in 2018 when this person took over it. But yeah, that's the thesis in a nutshell. If you want to have any questions about that one.
60% in the hands of one person. We're looking at $25 million free cash flow after a really, really big 2020, well over 90. What was that market cap again?
So that owner, I don't know his name again, but he actually also acquired Grindr, the dating app.
Oh, wow.
All right.
Made a big profit on that as well. But a lot of these kind of SaaS businesses, apps and internet type businesses he's been pretty good with. So
interesting.
Yeah. And another reason the shares have sold off a fair bit is about 10% of their income comes from Russia and the Ukraine. So they have, so their browser search is actually from Google. So they get paid by Google. And that's about 90% of their browsers functioning is Google around the world. And then there's another one that starts with a Y. I'm blanking on the name, but that operates in Russia mostly and partly the Ukraine. So that's about 10% of their revenues that will be hit significantly this year. But the remaining 90% of those revenues should grow at about 20%, is about what most people are expecting.
No debt on the balance sheet is nice. I noticed. And did you mention something about buying back shares? I think you did.
Yeah, 50 million of shares will be bought back.
Million. Yeah.
And just to give you an idea of some of the numbers, I'm looking at a write-up on specialsituationinvestments.com. It is a paid site, but to give you an idea of some of the numbers, they have the market cap at 658 million at the time of writing, which is probably close to where it is now.
Yeah, it's close.
They back out 181 million for cash. And then there's the 3 private investments that they value at 130, 100, and 55, which gives you an enterprise value of the operating business at 195. If you adjust the EBITDA and exclude the Russian part of that EBITDA, you get about 50 million, so around 4 times EBITDA in their valuation for the operating business. And they did actually just sell off one of those 3 private investments for slightly more than this write-up projected. I think it sold for 140, and on here it was valued at 127. So we can take that as being somewhat accurate from that person, I guess.
So it seems like an overreaction to potentially an overreaction to the Russia-Ukraine crisis, and people not realizing that there's a lot of value here outside of that. Is that kind of the main thesis here?
Well, I think the reason it's undervalued, the reason the opportunity exists, one, huge Chinese owner. Operates in Norway
Sure.
but trades in the US, which is another reason some funds won't access this. It is a small cap, but it's even smaller when you think of what's actually being traded. Although it's 660 million market cap,
Yeah, it's
around
like 40%
200.
of that,
Yeah.
sort of.
So it's much smaller and more illiquid than people would think. So yeah,
That's Frank's wheelhouse right there. Small liquids, microcaps.
As well as, of course, the Russia-Ukraine conflict would scare investors out, but it is a small part of the revenue that you can write off as a zero and still have a cheap, great business.
Is that what makes it a special situation, that exposure to Russia and Ukraine, do you think? Is that why it was in that service?
Considering what the service actually talks about, they more talk about proper special situations like the Greenblatt spin-off type bankruptcy situation. So this one's out of character for that service, actually.
Okay.
Yeah, I don't know. It depends how you define a special situation, I guess.
Right.
But
Sure.
the buybacks is a big part of the appeal, and these underlying assets that probably aren't being recognized by the market.
And the illiquidity, I would presume.
Real quick. Hey, Tom, did you catch all that? What do you think?
Put him on the spot.
Yes. Yeah, I got none of that, guys. But happy birthday to Frank.
Thank you.
How you doing, Tom?
Good.
House hunting,
you guys.
Did you find the place, Tom? Did you find it?
Yeah, there was one we liked today, but yeah, I will update everyone in more detail when we actually get one across the line. We've been looking for quite a while now, it feels like. So
that's the game.
Putting in an offer on this one.
It's top secret information, bro.
Okay, sorry. Yeah, that's too much.
Well, we shall see.
Good. Well, welcome.
That's an interesting one, Frank.
Opera.
I don't know how I feel about the 60% holder. Do we have any sort of insight on this guy? Like, does he have a proclivity to sell at a certain point? Or
another thing I should add, he just bought over the past 12 months. He's bought more shares at about $8 per share. So significantly more than what it's trading at right now. So
all right,
he's bullish at a much higher price, and if he was to sell, it would be significantly higher than what we're looking at right now. Otherwise, he's at a huge loss. So I wouldn't be concerned about the owner yet. Maybe in the future, when he wants to exit, that becomes more concerning. But in the current situation, I wouldn't be worried.
And he's a chairman, it looks like.
Mm-hmm.
Yeah.
Well, that's good to know. How did you come across this one again?
So from a guy reached out to me on Twitter, and he runs a service called specialsituationinvestments.com, which is a paid service, has a crazy track record of some of the write-ups that get put on there. I think it's annualizing like 50% for the write-ups since 2017. Yeah, crazy. But yeah, all special situations, and this was just one that stood out to me as the type of business I usually look for. But again, I'm literally a day and a half looking into this one. It's very interesting, but things could change the more I look.
Hey, that's all we're looking for. The best ideas, just looking for the idea. Due diligence comes afterwards. Yeah, I don't think I'd have anything more to add there. Definitely interesting.
And I think this will be my write-up for my newsletter this month as well. So I'll have a lot more digging to do yet.
After a couple mega caps, now we're back to the roots.
So it sounds like most of the revenues are being generated in Africa. Is that right, Frank?
Of one of they have a news application, so kind of an extension to the browser. That's mostly in Africa, but overall, I think about 30% of their revenues might come from that region. There's a lot in Europe and everywhere as well. One of the more appealing aspects is the Opera GX, which is like the gamer browser. So it's really kind of niche audience there.
I think I got an ad for that this morning.
Well, they've done it.
If I'm not mistaken.
They've done a deal with PewDiePie as well, which is why the name jumped out in my mind is that PewDiePie had been pushing it for a while. So that was a big part of their branding for the GX extension.
Good guy to have on your team.
Yeah.
Just a casual 100 million subscribers.
Yeah.
Check into that one.
Yeah. Cool.
Someone just said it was pitched at an MOI conference as well, which I'd love to see.
That's a good sign.
Definitely. Also, Andrew Walker has done a write-up that's behind a paywall. I can't read it, but I assume he's interested in it as well.
Was it just another investing
another-
blog or something?
Yeah, just another value podcast and
Value
blog.
blog.
Yeah, that's the one.
Yeah, cool.
All right, nice.
Opera.
On the surface,
If we
looking nice. What's that, Tom?
Have we seen Jason in the chat yet? He was making some big promises on his live stream this morning. I'm not sure if you guys caught that or not.
No, I haven't seen him either. What's he up to?
He was talking $500 super chats tonight on Punch Card, but
Wow.
What?
Did he have a
He's-
stock pop?
he hasn't shown up.
Frank's out.
Well,
He's Frank's laughing.
he said
Frank's
it's been a
laughing.
good week. So
Frank.
He's eating. Is that like a cheese toasty?
This
What do we
is this is during dinner investor, not after dinner investor.
Nice. Well, Frank got caught out by daylight savings, didn't you? Maybe do you think he had time to have a toasty and then?
I was in the
had to
middle
go
of
live?
lunch. I thought I had an hour to go, and the boys rushed me in.
Yeah, we were talking about that before the show. That's by far the hardest part about this is we put more mental energy towards figuring out what happens during daylight savings changes because
Telling
it's
ya.
different everywhere. And it's so exhausting.
Hey, Jack, I just put something in the private chat for you.
Yeah, I
Maybe
see
you can
that.
pull that up real quick.
Sure.
Just a quick little summary from MOI on Opera.
Oh, it was a recent one too. That's awesome.
Yeah.
Oh, so Jim, the name, he has 2 Seeking Alpha write-ups that I've read by him as well. So
Okay.
he actually values the private holdings significantly higher than I do. I'm estimating, I'm using much lower multiples than they're willing to, because the private investments are these kind of high growth speculative type positions where I just wouldn't apply as much of a valuation to them as he has. But it could be accurate with those predictions. I'm not sure.
Better to be conservative, right?
And even being conservative, you get that kind of 4 times EBITDA for the operating business, which is growing at 20%. So that's a pretty rare thing to come by.
Yeah, after backing out significant portions, which is impressive.
And plus the buybacks on a per share basis, that all gets even more appealing as well.
Sure. So that's MOIs.
So in that right up there, it said 1 times the EBITDA, but that again would be being a lot more bullish on those private holdings when you back it out.
Mm-hmm.
But if he's right, that's a hell of a lot of upside.
Yeah.
I'm just looking in ticker at Rumel Asset Management real quick. It looks like Opera is their 7th largest holding. And it's like 7% of the fund. So a significant bet.
I'd be
For which
curious
one
whether
is that?
they're adding more to it while it's at its all-time low.
Rumel Asset Management. His last name, Asset Management.
Gotcha. Oh, so that's from MOI. Gotcha. I was thinking it was someone else. Opera. All right. Not
Someone just
bad.
said there's a couple of write-ups on Value Investors Club. There's kind of been one each year for the past 3 years, all of which are worth reading if you're interested in the company.
Speaking of VIC, I was looking at HP and there were
one moment.
5 different. Yeah, go ahead.
We just got interrupted by a $500 Australian dollar investment, which apparently is only $5 nowadays.
Taking shots. Wow.
This guy's getting Australian dollars confused with like Turkish lira or something. He's been studying that racist investment a little much.
Good one.
Oh, he tacked on a bonus. What that would be like $200, right?
200 lira. Yeah, 200 lira.
Yeah.
Thank you, Jason. He wants to know
Thanks,
your Thor
Jason.
allocation, though.
Appreciate it.
Well, I thought I was going to get $500 to answer that question, but
You can kind of give him a half answer, right?
well, how So I made a video on this topic a couple of days ago about percentage of portfolio versus percentage of net worth. So how about I give Jason what I think is the less meaningful number, because he's lowballed us with his $5 super chat. So I'm going to tell you it's 18% of my stock portfolio. And that is, I've lost a lot of the gain. Like you mentioned here, it's down like 40% or something, or might even be, it's probably down 40% from its highs or something.
What's the company?
Thor Industries. So yeah, it's about I'd have to do the exact maths, but maybe 15% of the portfolio at cost or something like that.
Have you been a customer of Thor at all, Tom?
Nope.
You're not going to show us your RV, huh?
No, I mean they've held me up in
portfolio?
traffic plenty, but I tend to tolerate it a little more now that I'm
That
a
makes
shareholder.
sense. That makes sense.
Yeah.
Good.
Yeah. So another what have we got? $7 in total. Another $493, and I'll tell you the percentage of net worth, Jason.
That was a good video. That was like, it's pure like this weird corner of investing YouTube of just niche finance content. Like,
Yeah.
how do we talk about portfolio allocation, net worth versus the portfolio itself? It's like you're so into the weeds, and we all love it.
Yeah,
It's
for
great.
sure. I think it's a really interesting topic. Yeah, if we can get that $493 out of Jason, I think he might find my percentage of net worth answer quite interesting, actually. So yeah.
We'll keep tugging on that string as we go here.
I was saying on that, I commented on that video with my stock portfolio is like 100-something% of my net worth, and my real estate assets are like 400% or 500% because of debt. So it's like,
Oh, good.
yeah,
Good.
but you countered, Tom, with when you talk about stocks, like stock equity, oftentimes you don't even think about the debt within the stock, which is a fair point. You're really looking at the equity value of that company. You're not looking at the asset value necessarily. Which would imply that if I have like a highly leveraged real estate deal, I should only look at the equity, which makes some sense. I suppose it's best to do both at the same time for the most complete picture. Tom, I think you froze for a second.
Yeah. Am I back?
Yeah, you're back.
Okay. Yeah, I think the right answer is to, understand the context around that real estate, that, it is quite leveraged, but I think I still think the right way to look at it is in terms of percentage of net worth, like look at your equity in those properties.
Anything that would scale it down to your like profile, like to that as well. What's your income? Like how much monthly income is this investment? That's a decent one, depending on the size of your portfolio. What would happen to your portfolio if this thing fell in half? You just kind of go through all those scenarios, and it really is like a relativity question, and it's going to be different for every person. It's all part of a well-balanced diet, I suppose.
It's no different than when you look into large shareholders in a company. You really want to know what that is towards their net worth. If they own 10% of the company, but it's only 0.1% of their net worth, then it's a meaningless investment to that extent, even though on a surface level, it would seem very meaningful.
Yeah.
Speaking of which, Warren Buffett, Berkshire Hathaway buying HP, billions of dollars, but it's peanuts for Berkshire, right? But recently, what was the size of the stake that was revealed?
Was it about 400 million? Is that right? Somewhere around there.
No, I thought it was a couple billion. No. What am I saying? The company's not even that huge. No, I thought it was like 4.5 billion.
Yeah,
well, let's see. What's the market? What's the market cap of HP?
It's like 40 billion. HP.
Yeah, it was too big to be a Ted and Todd investment, so it had to have been several billion. Yeah, 4.2 billion looks like.
Yeah.
Wow, 10% of the company, huh?
Yep. You threw me off there for a second, Brad. I thought I was looking at millions earlier. I'm like, wait a second. I thought this was a much bigger investment. A few billion, which for anyone else would be enormous. And but still significant in that it's a percent or two of, well, not even, it's like, we'll call it a percent of the cash pile. Just the cash, not even the rest of the portfolio.
Yeah, I was saying there's been
Yeah.
like 5 write-ups on this in VIC, but there hasn't been one in 6 years. So I think
Which is
a lot of people
odd.
have kind of left this one for dead as some kind of value trap, and now
It's
Buffett's
been
come in.
it's been on and off the Magic Formula list.
Mhm.
I've noticed, and I'm sure you have as well, Brad.
Oh yeah.
So I would have expected to see something more recent, which it's surprising that there hasn't been anything in that many years.
Yeah, have you guys seen anything, Tom, Frank?
I've seen it constantly show up in like Magic Formula screens and stuff.
It's
and
on
I
there
know-
now in the top 50.
Yeah, I know. Carl Icahn was quite involved with HP up until fairly recently, wasn't he?
Don't know.
So someone might need to fact check that, but I thought Carl Icahn was involved in this one somewhere.
I know he's with Hertz until fairly recently, but it might be the wrong H stock. So let's see, Carl Icahn, Hertz, or HP.
Discards HP in the second quarter. So that was of 2020. Carl Icahn got out.
Okay.
It's around the same time you left. No, you left Hertz Q1 when they were going through bankruptcy, before they came out like a phoenix.
Yeah, and there's 2 HPs, right? There was some sort of spin-off that happened.
Right.
So there's
Hewlett Packard Enterprises, and then I think there's
exactly
2.
yeah.
Mhm.
So there's HPE, ticker HPE,
Right.
which is like some sort of cloud business.
Mhm.
And then there's HPQ, which is what Buffett's bought, which is the hardware, laptops, printers,
More of a Buffett business.
type business.
A Buffett.
Yeah.
When you think of a Buffett business, this seems like it would fit.
Yeah.
Stuff.
So he bought it at about a 15% free cash flow yield. Comes with a nice dividend yield as well, 2 or 3% maybe. It's a boring old cheap Buffett business. Lots of free cash flow, nothing too exciting. It
Is
almost
it a
seems
Buffett
like
business or is it a Ben Graham business?
I don't think it's that cheap. but-
No, it's not that cheap.
It kind of seems like a bit of a market call almost. Not saying that's how Buffett invests usually, but these are typically the type of businesses you want to take in a market environment that's going nowhere. Just these really high free cash flow generative businesses, low valuations. Yeah, I'm not sure. It's not a business I understand whatsoever.
I didn't even realize how large the decline was in free cash flow from the financial crisis.
Well, that's got to be the spin-off, right?
Yeah, it
That's
must. Yeah, it
right.
must
It's got to
be.
be
You're
when
right.
the
You're right.
cloud
They
business
spun
was in there.
You're right.
Yeah.
But still, like the whole time, been very free cash flow generative. Right now, they're looking at a pretty good year, relatively speaking. If you zoom back in, looks like they were kind of hovering around that. We'll call it mid $3 to $4 billion in free cash flow per year, and then this last year they spiked up to about $6. And I think they just released their last quarter's earnings that were pretty good. Good enough, I suppose, for Daddy Buffett to take a swing.
It's like they're doing buybacks as well, according
Yeah.
to Steve.
Yeah, they've been doing
been
aggressive buybacks.
Growing those buybacks. That's probably the main capital allocation decision they're making. That's about 10% of the company they would have bought back last year. Is that right? $6 billion is what they bought back.
So my ticker wasn't loading for a second. Their balance sheet right now. Total shares outstanding over the last 5 years, or more like 6. So down to about what this would be is that 1 million shares or I think that's or is that 1 billion shares? Like 1.7 billion down to 1 billion.
Yeah, it's in millions, so it'd be 1 billion shares.
That's a lot. That's a big decrease.
Yeah, and in a pretty relatively short period of time too. So your cash flow per share has definitely been going up since free cash flows have been going up too. So cheap in that sense.
So of their roughly $6.3 billion in free cash flow last year, they spent all of that on repurchasing shares. Obviously, some could come from the cash on the balance sheet already, but
How
that's
does
how
that
it looks
look?
on the cash
Yeah,
flow
about
statement.
3.5 billion in cash and decent amount of debt. Yeah, I guess relative to their market cap, not horrific. About 6.5 billion plus about $1 billion in leases. So we'll call it 7.5 billion in long-term debt compared to
What was the free cash flow?
they were at
6.3
about
roughly.
6.3 billion. So pretty good in that sense.
Yeah.
As long as they can keep those cash flows up, which is I think is going to be a question for everyone, especially for entering potentially rocky times, rockier than they've been. How would
Right, that could have
HP
been
fare?
It could have been an anomaly, right, to the
Yeah,
last year.
Because it's a big spike if we go back to cash flows. Let me clear the chart. Yes, I'm sure I want to clear the chart.
Are you guys Mac users, or are you running Windows? Are you guys using HP laptops for the stream?
No, I'm on a PC and Windows. Yeah,
Mm-hmm.
I just
That's
use
right.
Mac.
You're a bit of a computer builder, aren't you,
no,
Jack?
I'm very amateur, but yes, I did build this computer. So
Yeah.
I don't think I have any HP. I don't think I ever have had any at any point, other than like a printer a while
wise.
back.
It's probably
I
wise, Jack.
I had an HP printer at some point. I think that's it. That at least that's what I can think of.
Yeah.
Does anyone know what their kind of interest payments look like on the debt?
That's a good question.
On the balance sheet, they're paying, on the income statement, they're paying 250 in interest expenses.
And that's on what was it, like 6 billion or so. Yeah, I wonder if there's like, that seems pretty low. No,
well, if their interest payments are only that amount compared to their free cash flow, then that debt doesn't really seem concerning at all.
Yeah.
And they could theoretically take 1 year of free cash flows as long as they're stable and throw that into paying back debt. Right now they're doing it more towards shares, it seems. So you're getting that value returned in some way, at least currently.
I'm surprised revenues have been growing since 2016.
Agreed. Pretty
Like,
significantly too.
I would have assumed without looking at it that it was a decline in business, but it really is just the standard value investment stock, I guess.
Standard as they come, I suppose.
Like everything you look for, the things that you say Buffett looks for, this is pretty much it.
Yeah. Predictable
Maybe
cash
other
flows, like
stable margins, not growing too fast, heap of free cash flow, buying back shares.
Yeah, look at those margins. Interesting.
I get why he likes it, I guess, but I think it's hard to see where the outsized return on something like that comes from.
Well, he's had a few investments that strike me in a similar way. Like I was talking with Brad actually before the show. Like the Verizon investment didn't seem like one with huge upside, but maybe it was like some weird dividend play just to put the cash somewhere where maybe the downside isn't that big, get somewhat of a return. Maybe it's something like that. I don't really know. I'm not in Buffett's head, but maybe it's something like that.
Does this interest any of you now, the Buffett investment?
I've been slightly interested since I saw it a while back on Magic Formula doing the series, obviously. But I took a quick look and I was like, I don't know. I wasn't sure how much of an anomaly like 2020 was, if they're going to do worse out of that. Clearly, they had a really good 2021. So yeah, I'll probably take a closer look after this just to see if there's something I'm missing.
I think Tobias Carlyle might have owned this. I don't know if he still does, but I think he did in the past in his acquirers fund. Just being a very cheap stock. It pops up in those type of screens.
He put out a pretty positive tweet about it after this news came out the other day, so I suspect he still owns it.
And they're only up 2.5% on the year, so even with the Buffett news, it's flat on the year.
It's something that makes sense in a Tobias Carlyle portfolio, like a very diversified basket of cheap stocks. It's
Yeah.
more so a concentrated bet where I couldn't be comfortable with it, I don't think.
Yeah, I think that's a pretty fair assessment. Is it? It is.
Yeah.
It's pretty big. Like we're talking $42 billion. So it's a big machine for sure. It's not in Frank's preferred microcap wheelhouse. So yeah, I don't see the big outsized returns like you were suggesting. Right, or like you weren't suggesting. I guess is what I should have said.
Yeah, and I mean, 4 billion sounds like a lot of money, but just to put that in context, if you assume Berkshire's roughly fairly valued at the moment, they've got a $780 billion market cap. So
Yeah, right.
it's I mean, even if you put Apple in that context, it doesn't look particularly large, really. But
Yeah.
HP definitely not.
What's the Apple position worth in dollars?
It's got to be it's over 100 billion, isn't it?
Is it that
Yeah,
big?
wouldn't it have to be? It's
Yeah.
half the portfolio, and if you back out the cash, we're left with.
That's pretty crazy. Almost all of these kind of $4 billion bets are irrelevant when you have a $100 billion stake in Apple.
Right.
Yeah.
you've
So
got
this is
Go ahead.
this is probably as of the last 13F, but it was 157 billion.
Crazy.
Just one position.
Yeah.
Man.
Insane. He only put 30 billion into that, didn't he? And it's at
Around
like
that.
157 plus he's got I don't know,
Casual.
a few years dividends as well.
It's so nuts.
I put a tweet up. I put a tweet up a few weeks back, which was actually something Toby Carlyle said as well. I think he was on the Equity Mates podcast a few weeks back, and he was talking about this whole Apple investment from Buffett and was like, Buffett's always said he doesn't invest in tech, and then turns out he's the best tech investor ever when he does it. But people don't really like he saying that.
And it seemed you could have made an argument that he got into it late, whatever it was, like 2016, right? And look at the run it's had just since then. Crazy.
Yeah,
amazing business.
He should have paid closer attention to what Forrest Gump was investing in.
Yeah, right.
He would have been much better off.
Speaking of niche finance content, that was a good one a while back. How did Forrest Gump's investment in Apple? What did it have done? That was a good one. We got a question here from David here. If Buffett really loved HP, I guess it would really go for any stock. Why wouldn't he buy the whole thing? Doesn't he prefer that more passive approach rather than the activist kind of role?
I don't know if it's activist. I mean, he'd leave them to run their own lives if he acquired them.
Yeah, true.
Don't know. I mean, you have to pay a bit of a premium when you acquire public companies, call it a 20% premium or something. So that maybe that changes the equation for him.
You're also kind of married to him, right? If you acquire him.
Yeah, but I mean, I don't think he buys stocks with a different view than that.
Yeah. Though to the activist sort of thing, if you bought, we'll call it the majority of the company. If you bought the majority of the company, then are you gonna are the incentives going to be aligned now for existing shareholder management, whatever it is? So there's that question too. Let's get this super chat here from Jonathan.
Super chat.
He personally asked Buff Dog if he should clone the HP purchase. He once again recommended to buy the index. Oh, Jonathan.
Oh, boy.
Oh, Jonathan.
Yeah, I love the same thing.
I love how Jonathan remains on our streams with talking about individual stocks, pitching the index. It's not a bad pitch. It's actually a very good pitch, the index.
It's a phenomenal pitch.
We don't say that sarcastically. We say a lot of things sarcastically, but that's not one of them. It is funny how Buffett preaches the index despite doing like so much of his own picking. I wonder what his attitude was when he was just starting, like in his 20s into his 30s, or I guess in his teens when he's really starting. Did he have a similar sort of philosophy on index investing? Like, did he think he was being arrogant by picking stocks, or I kind of wonder.
Indexes didn't exist back then.
Oh, sure they did.
Well, index funds at least. I mean, I think there was a
cheap
Dow. I
index
think there was a
funds.
Dow index.
I thought
No, it was Jack Bogle that started the first index fund.
I thought that
right?
was
And
like just low cost ETF stuff that kind of was pioneered by.
I don't know. I think it was much more of a mutual fund world. If you
that's probably true. Definitely fees were a lot higher. So maybe that changes the equation.
Yeah, I know. If you read some of his really old letters, like Buffett Partnership Days, he benchmarks himself against, I think, the Dow and then a handful of popular big mutual funds of the time.
Mm-hmm.
Yeah, so presumably that's the alternative that people had to investing in a hedge fund with Buffett.
I'm guessing not a lot of his competitors were reading the Moody's manuals, so that was maybe a bit of an edge back then.
Yeah, I wonder how much bigger the edge was compared to what he would have now. Just with the accessibility of information now being better in a lot of ways.
Yeah. We got another super chat.
Oh, I missed that. Thank you, Jonathan.
Compound 15. Hey, that's better than the S&P.
Yeah. At least historically speaking.
Yeah, if you go back far enough, I guess.
Yeah, it's not the last couple of years. And anyone looked at DFH?
Dream Finders Homes. Jack, that's up your alley.
Houses, homes. I love houses and homes. Let's see here.
I'm always a bit, I don't know. I don't think I like home builders in general, just because of all the macro considerations attached. Not to say that they can't be great investments, but there's a lot of unknowns involved, even in the current market, like what interest rates and things look like.
And they're also a licensed home mortgage broker. I wonder what portion of the business that is.
Founded in 2008. What a time to be alive for a.
Oh yeah.
Yeah, was that
for a home builder?
So it probably had a good run, right? Let's see what the all-time. Or they went.
It doesn't
public.
look like it's been public.
They just went public pretty recently. They went public at a good time.
Yeah. Well, if they're cloning NVR, there's basically you want to figure out whether they're actually kind of land speculators in disguise, like a lot of home builders are, or not. Yeah. And you want to see the share count dropping like crazy, I guess, if it is truly an NVR clone.
Nope. Pretty flat. A little bit of dilution in the last couple of years. They haven't been public for too long, though.
Yeah.
Yeah, I mean, the things that made NVR a crazy good investment was long-term growth. Like, the underlying business has grown a huge amount at NVR, and the stock kind of just traded at 8 to 10 times forever, and they sunk all of their cash flow into buying it back, basically. Retired, I don't know, like 90% of the shares over 20 years or something insane. So, yeah, if you can find a genuine clone of that, let me know.
Yeah.
There is a shareholder letter that Shane, the guy who gave the super chat, he put it out on Twitter. And I've kind of skimmed through it, 5 or 6 pages, and it does seem like a really high quality management team. It's just not in the industry that I think I like to invest in.
I see some bumpy cash flows here, but wait, what's their market cap? So we got massive year in 2020, which makes sense, especially if they had that mortgage arm with all the refinances that went on with the rate cuts. And I guess relative to the other years, still a pretty big 2021. It's about 60 million, we'll call it, versus a $1.5 billion market cap. So I wonder what their assets look like. Is this kind of like a land speculator, like you're getting at, Tom? Very much could be. Because cash flows are definitely, you would need something more to justify that valuation.
Is it the CEO maybe who owns like 16% of the company? Did you guys talk about that already?
No.
Yeah, I think that is the CEO.
So that's pretty cool.
William Radford II.
Is it? Or is it Patrick Zalupski? Yeah,
where's
so that'd be worth. I'm just looking up the DFH CEO. That might not be him.
Right. Maybe he's a chairman or board member or something. I'm not sure.
Yeah, owns
Yeah.
it through
Boston
something else.
Omaha isn't Boston Omaha some sort of like Baby Berkshire insurance
Yeah.
conglomerate thing?
That's what people
Sounds
are
like
saying.
they want to
They
be.
brand. That's how they brand themselves. But
Right, but they're not really. Is that what you're trying to
I
say?
think they do follow a similar model. I don't know anything about them.
Yeah, I've just seen a few tweets from people making those claims.
This is all ticker shows.
Right. So are they in Boston or Omaha? I'm confused.
Probably neither. They're incorporated in Delaware or something.
Cayman Islands.
Yeah. Oh, and they have a brokerage arm. Huh.
Have we got any more? We got any more best ideas after we get through this one?
No, none that were slated. Did you have one in mind, Tom?
Well, I was just kind of gonna rehash an old one. I
That's
did
fair.
have
That's
one that
fine.
might be interesting to talk about. Have you guys already shared some other ideas, or just Frank so far?
Opera. That's
just
it.
Opera.
Yeah, Opera. Then we did HP, and then this one from Compound 15. Thank you for the super chat again.
Yeah.
What do you got, Tom?
Naked
is
Wines.
my no, it's not Naked Wines. Is my internet really bad? I can
No,
change to another connection if I keep cutting out.
You seem all right.
Okay, all good. Yeah, it's already been mentioned in the chat a bunch. Most of the stuff I was going to talk about actually, because it was to do with Thor. They had, I guess it's portfolio. It's a stock that's been in my portfolio rather for a few years now. It had a pretty nice return, but it's come back down to earth quite substantially. So I'm getting kind of interested in it again. I'm trying to avoid, where possible, having this like anchoring bias to purchasing it at a slightly lower price. But I guess the big news this week, like I've gone through the Thor thesis on my channel and on Punchcard a few times. They've kind of grown in large part through acquisition for a long period of time, buying businesses and just like kind of the RV and motorhome industry at reasonable prices for just a long period of time. Organic growth has been pretty crazy the last year or so, which is why Thor has had a very good last 12 months. And they have like a very large order backlog, like more than a year's revenue at the moment, which is kind of crazy. But I guess the big news that came out this week, there was quite a significant insider purchase, which actually Jason messaged me about because I didn't actually see that news. But I think I've got a tab open here with that. Let me share this.
Yeah, that order backlog, it's been like that for quite some time now, hasn't it?
It has, yeah. It sort of exploded upwards. I can pull that up shortly as well if you like.
There you are.
Is that coming through, Jack? This will show the insider purchase. So this is all the activity for the last kind of couple of years here, but for the back half of 2021 and so far in 2022, there's been a few fairly substantial insider purchases. So Peter Orthwein down here in December bought $1 million of stock. He's a huge shareholder, so that was only like a 1% change. He's the founder of Thor. But he was buying at 103, and we've had him purchase again late January. He bought another $1 million of stock, and we've had another director who actually, interestingly, used to be the CEO of Harley Davidson. He's now on the board of Thor. Just bought about $800,000 of stock, which for him is a 50% increase, and he's bought that at about $80 a share. And Thor themselves are repurchasing about $250 million of stock at the moment. They're going through a buyback program on about a $4 billion or so market cap. So reasonably
about
significant
four and a
buyback
half,
for them as well. Yeah.
11% short interest, according to Ticker.
Yeah. I might just jump over to the backlog because I think one of the things that's always floated around about Thor is that it's really cyclical. And I think currently it's trading at like a PE of 5, just under 5. So it looks really cheap on a current earnings basis, but I think people are kind of terrified that those earnings may just go through the floor at some point.
How many RVs are you really buying in a year, you know?
Yeah, do you have a take on the future of the RV industry, Tom?
I mean, I have kind of a long-term view that it probably grows slightly faster than inflation, and that will be kind of the organic growth that Thor can get. But then they, like I say, acquire businesses reasonably cheaply, like kind of 5 to 6 times EBITDA multiples is what they seem to use most of the time. So they can squeeze a bit of growth out of that yet. But they're really cheap. So yeah. So you don't necessarily have to have them grow all that quickly to get a good return. And they've grown in the teens for revenue and earnings and free cash flow for the last decade as well. So this is what I was kind of wanting to bring up with the cyclicality part of it. So if you look down the bottom right here with their order backlog, it's kind of just exploded. So they have a little under $18 billion RV backlog of orders. So Thor wholesales RVs to dealers, and then the dealers then obviously sell them to the end customer. And the revenue for the last quarter was $4 billion. So it's going to take them quite some time to sort of work through that backlog, even if orders do fall off a lot. So I think that irons out a lot of the cyclicality problem personally.
Now, how reliable are these backlog figures in terms of converting them into sales? Do you have a sense for that?
That's a good question. It's something I need to do more digging into, to be honest. The other thing I would keep an eye on is this dealer inventory, which is up kind of the top right. I guess it's one thing for the dealers to purchase RVs to kind of put on the lot, but if they can't move them, that suddenly turns into a problem. And that's essentially what Thor ran into in kind of 2017 and 2018. They had another one of these kind of 1 or 2 year booms and just overproduced, frankly. And that meant they had a very rough 2019 when they had like no orders. Because the dealers had so much inventory, they didn't need to buy more RVs off Thor. So, yeah, I don't have a great answer, honestly, on how reliable that backlog is.
Would the macro concern, I guess, kind of be that a lot of these earnings are pushed forward during COVID when people couldn't travel and they take the RV kind of route, and then you get the additional interest rates rising, debt's going to be less accessible. Do you think maybe the next 5 years could be concerning?
Possibly. I mean, like, it's got a long-term track record of growing at like 12 to 15% a year. So yeah, it's cyclical, but that's strong in my book long term. And just quickly on the interest rate thing. So there's a couple of things that I think there's a perception that they have a big impact on RV orders, which is basically fuel prices and interest rates, because a lot of people are getting financed to buy these things. It's actually kind of surprising, some of the examples I've seen of how much people can just kind of change the terms of the loan with higher interest rates to make the payments still make sense. So that actually hasn't been as significant an issue as you might think, I would say. And I think COVID has definitely been a strong tailwind for them. Obviously, a lot more people traveling domestically and that sort of thing. So it's hard to say exactly how that'll pan out longer term. But I mean, RVs were, like I say, growing at a faster rate than inflation anyway, but it probably has pulled a lot of this forward.
Are these RVs that people like live in, or are they higher end for like people who just want to get out and see the country? Do you have a sense for that?
Yeah, so Thor own about, call it 40% of the RV market. They have slightly different market share in towables versus motorized, but they have products from $20,000 up to $1 million, basically.
Okay,
and everything
the whole range.
Yeah.
Winnebago. Somebody's asking about Winnebago.
Yeah, sure. So
which is a punch card holding, right? Not us. The guy who cloned us.
The real punch card.
No, the real.
The original, I should say, since we.
Yeah.
I don't want to.
Yeah,
Like, because Punch Card Capital stole it from Buffett, and then we stole it from Buffett as well. So we both stole from the same source. So
I prefer to say clone as opposed
oh
to
yeah,
stole.
right, clone.
Yeah. Yeah, I'll show you kind of what this chart looks like. But Thor's quite a bit bigger than Winnebago. And it's a very consolidated industry. So there's really only 3 large players, which are Thor, Winnebago, and then Forest River, which is actually a Berkshire subsidiary.
Oh wow!
Which gives me some comfort that Buffett's comfortable in that
In that industry,
But,
at least.
Yeah. So I'm just trying to find it here with the market share.
Yeah, Winnebago's at 1.7 billion market cap.
A lot of short interest as well. So I'm guessing that mostly comes down to the industry rather than the individual companies.
Yeah, sounds like it.
There you go. Hopefully that's coming through. That should show the market share, Jack.
Yep. You zoom in a little bit.
Mm-hmm.
Yeah, there we go.
We got that. Cool. Yeah. So Thor's pretty dominant, and yeah, the market share fluctuates a little bit, but
they're all pretty dominant.
significant
It's a smaller group.
Yeah. I mean, if you dig under the hood a little bit with this, there's a lot more brands than show up here. Like Thor have a huge number of kind of brand, huge number of subsidiaries of different brands, but
yeah,
there's a lot of consolidation, and I don't think you're going to find what you see in like airline industries and stuff where your dumbest competitor is kind of like your worst enemy with pricing and that sort of thing.
So if the industry is already really consolidated and they've grown through acquisitions in the past, how do they grow moving forwards? Is it just a kind of pricing power situation, or?
Yeah, I think you still get a little bit of organic growth just from the industry in general. You probably still get the occasional acquisition, but like you're getting at, the opportunity set for that is a lot smaller than it might have been, say, 20 years ago. But they have started doing two kind of relatively new things. So they've basically never bought back material amounts of stock. So if you want to think of that as kind of an acquisition, then I can see they're definitely going to pull that lever pretty hard, I would say, over time. And the other shift that's still quite recent is they've started acquiring some parts businesses as well. And in many cases, those businesses have Thor as essentially like their sole customer. So that's an acquisition pathway they've gone down, that they can lower cost of production and that sort of thing. But the opportunity set's nowhere near as good as it would have been 20 years ago when they had a small fraction of the market. When they were just Thor and Airstream back in like the 1980s, that was quite a different growth opportunity versus where they are now.
Who owns Airstream now?
Thor. It's a Thor subsidiary.
Okay.
Yeah.
Cool. You can say that about a lot of companies and industries. Well, if I knew 20 years ago. Yeah.
Yeah, but I mean they trade at 5 times earnings, so you don't need a lot of growth to get a reasonable return, in my view. Assuming that those earnings don't fall off a cliff.
Yeah, right. I was going to say, I think people are pricing in some sort of drop off, but the backlog is that's I don't want to call it insurance, but it's a decent amount of insulation for at least some time, which is good.
Yeah, for sure. Yeah, and I mean, there's directors that have sold at higher prices that are turning around and buying it back a year later now.
That's encouraging.
At these prices. So yeah. So that's my recycled best idea for you.
No, that's good. No, totally.
Good stuff.
We never said fresh best idea.
No.
It's a little stale. It's great. It can be refreshed.
Yeah. And just to quickly answer Jason's question there, what's the upside?
Oh yeah, he had asked. I meant to bring that one up. What's the upside? I think this one.
Yeah. So back in must be 2018 now, I guess. I had intrinsic value for Thor around $100 to $120. I think that's grown now probably more like 130 to 150, and that I would argue is still a reasonably conservative view of that. So that's kind of where my thoughts are on that topic right now. I guess if the price stays down and they can keep buying shares back, then that number goes up reasonably significantly. But yeah, I think a double isn't unreasonable.
Sounds like Monish. Facebook's a double. Thor's a double.
Yeah. And it's very well managed. I mean, I'm obviously biased here, but if I had to pick one stock out of my entire portfolio that allows me to sleep at night very well, it's definitely Thor. Besides maybe what my one Berkshire B share. then it's Thor. Yeah.
What percentage of net worth is that?
Yeah.
your ticket.
Yeah, exactly. But they actually have quite a similar kind of management style to Berkshire. It's very decentralized, and they acquire businesses and let them lead their own lives. They acquired Tiffin recently, which I believe the founder's name is Bob Tiffin. He's like 85 years old, and there's like an interview with Bob Tiffin and the Thor CEO Bob Martin, and this old 85-year-old dude's still just running the business and like loving it. So
the Warren Buffett of RVs.
Yeah,
Are they in an RV in that interview? They should be in an RV.
I think they're in a meeting room like next to the factory or something.
Missed an opportunity.
Yeah, they're close.
Should have one of those like fold out awnings, over them, like right outside the RV.
Oh yeah,
that'd
classic.
be great.
Yeah, that's good stuff.
There have actually been a couple of CNBC ones with the CEO.
Oh, that's wonderful.
With that setup, yeah,
that's wonderful.
So there you go.
Good.
Let's why don't we hit a couple questions before we wrap up?
All right.
So I think this has been relatively fruitful, and if not, oh well, on to the next idea. So, thank you, SE. SE358 says he loves that we avoid the cyclical stuff because macro. It's always tempting to go into deep macro stuff and talk about things and all the different things that could happen if one thing happens that causes other things to happen, but it's just it's pretty much impossible to do with any precision. So and we thank you, SE, for your constant support. Absolutely. Always active in the Discord as well.
Yeah, there's not many businesses out there that don't have some level of cyclicality.
Right.
Except accounting in Australia.
That just goes up. It just goes up and up and up.
Yeah, death and taxes, right?
So I saw a few good questions a little while back. Jeremy here asked about the inelastic market hypothesis. It says he finds it more logical than the efficient market hypothesis. What is the definition of the inelastic market hypothesis?
Yeah, I want to dig back into that. I think that was on a Bill Brewster podcast that I heard about this inelastic hypothesis.
It does sound familiar.
It was intriguing at the time, but I haven't revisited it. So thanks for that poke, Jeremy. Jeremy, let us know if there's other resources where you've kind of dug into this as well.
Here's this definition.
What does it say?
In simple terms, the consequence of demand inelasticity is that imbalances in supply and demand get resolved by way of price. In other words, when excess money flows to funds with rigid mandates, something has to give. Well, okay. It just sounds like supply and demand, no?
Yeah, it's not a very interesting way to look at it, but
unless that's not an accurate definition.
I don't think it is. But yeah, I haven't looked at it anymore, but I'm curious.
And I think anything that strays away from everything is perfectly priced and perfectly reasonable. I think that our confirmation bias would say that that's great.
Yeah. What else are you guys seeing? Oh, we got a super chat, $5. No, it's a fake super chat. You guys can't just write a price in the chat. That's not how this works.
Brad got totally head faked. Everyone's asking where your hat is, Brad. You had your thinking cap on.
$5,000.
Yeah,
Yeah,
it's
we
up
need
to
to bring
guys-
back that hat,
Are you
Brad.
gonna ever bring it back?
I will. Next time.
Maybe
We
we
get
should
a
have a
$500
segment
super chat.
like thinking time with Brad, and he puts his hat on, his thinking cap.
time? Is that what you got, Jack? Thinking
Yeah,
time. What do you think, Frank? Is that a good one?
Frank's got good branding names. What do you got? What would be a good one with his hat?
I don't think he does it on the spot, Jack.
No,
The hat's a good marketing campaign, though. I think you need to bring that back.
All right, good.
Just saying the MSM Sooner 10 comment.
what's that?
What is that?
Say it again, Tom.
Jason offered me like $1 an hour to run a StreamYard for him when he does lives.
What a great price.
Apparently that's 100 Australian dollars per hour.
You'd be rich.
Yeah. I mean, I've got to then pay foreign exchange to make it a New Zealand dollar.
Yeah, roll it into New Zealand.
Yeah.
Yeah, another one from SC here. I see this conversation that people are having about. I think Jonathan brought up using index funds again. Which is a fair point. SC
Jack.
said he'd rather fail picking my bets than just indexing and never trying. It sounds like a pride argument, no? just knowing that you tried at least. But I think the question is it worth the effort? When I don't want, and nothing is certain, so I always hesitate when. The big problem I have with index fund investing, or at least how it's pitched, is that it's like such a certain thing. Like it will definitely go up over the long term at this rate, and it's like, can you really say that? I always hesitate when people sound so certain about it. Yes, I know there's a lot of history, a lot of data that suggests it's probably going to do decent, but I would just be careful in assuming that anything will happen for sure, because there's always a chance it won't.
Yeah, it's easy to look at the index, the S&P over the last 10 or 15 years and think,
even the last 40.
Obviously, I should have done that, right? But
yeah, this big interest rate cycle all the way down to zero. It's pretty much any asset has looked fantastic since 1980 something. So, but even before then, like you can make a pretty compelling argument that index fund investing will still do decent. Even if we get a pretty prolonged period of not so good. I would just be careful in assuming that it will do good, because there's no guarantee of anything happening in the future.
Yeah. And I mean, I've talked to SC on Twitter a few times. I do believe he's crushing the index, but I may be slightly off on that.
Well, when you have an edge of any sort, even if that edge is just temperament, like you can do well. That's been shown time and again in any sort of market. Even when the index is down, of course, you're going to lag the index sometimes, but that's the game.
Mm-hmm.
If we want to go off the rails slightly, there was a really early question.
Clearly, you do, birthday boy. What do you want to talk about?
There was a question. What is your favorite movie all time?
Ooh,
Forrest Gump.
You
For
just like
the
the stock
investing,
tip,
right?
Tom. You just like the stock tip.
It's an investing
Yeah.
movie.
100%.
He's got Bubba Gump. He's got Apple. He's just a prolific investor.
Forrest Gump is incredible. I'd say since Forrest Gump is taken, I'll take Shawshank Redemption.
I knew that was going to come up. Those
Nice.
are both fantastic.
Good Will Hunting is probably my favorite movie of all time.
Mm-hmm.
Mhm.
I might have to give it to.
Let us know too in the chat.
Do I dare
Favorite
do
movies.
Empire Strikes Back? I love Star Wars, so
Let's not get carried away.
I might have to, because you've put out 3 amazing movies already, and I would definitely lean towards Shawshank though. It's a wonderful movie. There's a lot of good ones. One of those
No,
two.
that's already been taken.
I know. Well, I'm in a corner here. Like, what am I supposed to pick? Yeah, that's what's coming off the top of my head.
What about
You can
comedy
go-
movies?
I love the Blues Brothers. It's a very Chicago movie. Blues Brothers is probably my favorite for comedies?
Mine would be a Will Ferrell movie, but I don't know. Out of Anchorman or Talladega Nights, are both great. Step Brothers too. There's some good movies.
There's some other great. A lot of the older comedies are quite good, like Caddyshack, Top Secret, Pink Panther, like the like some of the classic comedies. Those are real good. Vacation. I don't know what it is about like 80s
Vacation's
comedies.
great.
Like 1980s comedies are just weirdly great. I don't know if it's because of like practical effects that just like caused some sort of creative thing to happen. But there's a lot of good ones from back then. Any others?
The chat is going crazy over these movies, guys.
Ooh, Moneyball's a good one. A baseball guy. I agree. Very good one.
Moneyball's good.
Bit overrated.
I would have to agree. It is a bit overrated, but it is quite good.
You know what movie I really enjoyed a few years back was Pain and Gain. Have you guys seen that?
No.
Mm-mm.
It's got Mark Wahlberg and The Rock, and they
yeah.
Are they like cops, or what's the plot?
No, they're
The Rock
personal
is just
trainers.
The Rock.
Yeah, The Rock's like a cocaine addict that just got out of prison.
Oh,
And they rope him into helping them like get loaded by scamming rich people and stuff. But it's pretty.
Why
fun.
do I think they're also cops in the movie though, Brad? I think you're right. And they jump off the building. What movie is that? It's definitely Mark Wahlberg.
You mean the other guys? No.
I don't know the movie.
He's a cop in that movie. I don't think that's what you're going for. I don't think The Rock's in that.
Naked Gun is phenomenal.
Naked Gun is
Gotta give a
wonderful.
shout out
Another
to
one of those
Naked Gun.
classic comedies.
Oh,
Kind of in
man.
that same realm.
Soup Chat.
All right, love.
Love.
Yeah, you're bringing us back into the game here. Domino's Pizza. It's down to almost to Ackman prices, if I'm not mistaken. When he bought in a while back.
Is that right?
Yeah.
He's gonna have to tweet about it again.
So
You're making me think of when Karan pitched Pershing Square Taunting Holdings, saying that it was better than cash because it can beat inflation on the way down or whatever last week. That was so wonderful.
It's a sound thesis.
Domino's has been a 20% CAGR over 17 years. That's just
look at this
sick.
graph. Look at this
Sick.
chart.
Look
it
overall.
plateaued and then came right back down.
Yeah, expand that to all. It's
Okay,
just
we're
nuts.
the technical analysis guys, but what do you think?
Yeah.
is the sell-off just due to like wheat prices and the agriculture problem at the moment?
But they have
Is that-
pricing power, right? That shouldn't.
Not that much.
Yeah. I remember that was a big buying point for Ackman. Pricing power was a big thing.
I'd be a little surprised if they have much pricing power. I mean, people go there for like the $5 pizzas, right? If you raise that, you look at
and they're basically selling them at cost, practically, or not at cost.
Yeah.
Obviously, there's a margin in there, but it's like the cheaper, like mass market pizza, if you will, not this artisan stuff that you might find elsewhere. So it's
Not
like
Jack Duffley standard pizza.
oh yeah, right. I am a chef after all. But cash flows are still doing great. So they do have a pretty substantial debt load, though. So there's that.
Mm-hmm.
terrible.
Tim says
They've
the
always
sell-off
had
is due to
terrible
pizza.
terrible pizzas.
Yeah.
Cash flows would say otherwise, but
Right.
Hey Jack, would you mind bringing up, because there's a few different Domino's listed companies, right? Back in the day, I actually used to have a few shares in the Australian version, so it's DMP on the ASX. Which I think is actually down quite a bit recently, but again, if you look at the all-time chart, it's done super well.
oh yeah,
Look
at that spike. Weird.
Yeah, it went to crazy prices last year. But I probably know more about this Domino's than the American one, to be honest. But from
Sure.
memory, if you scroll down and look at the growth, I think it was roughly growing at like 10% a year from memory. What do we got?
I'll go
It's
back
jumped
a bit.
around a little bit.
Oh, what is this 100% year? What happened there? That's revenue. Did they merge or something?
Yeah, there's been a few. Yeah, so I was sort of talking more in the last 4 or 5 years, but
All right, I'll go back, zoom back in.
yeah, okay. But anyhow, there's they seem to have sort of, I don't know. I would expect moving forward for the Australian listed version of Domino's, they grow maybe 10% a year, perhaps a little more than that. It's really through opening new stores is a lot of where their growth comes from. There's a little bit of same store sales that you get as well, but really opening stores is their main growth driver. And with the Australian listed version, you actually get Domino's in a few different countries. So I don't know specifically what that 100% growth year is, but I imagine it's something like that. So
Some sort of merger.
they have that. So they have the Australian business. They have the rights for Domino's in New Zealand. They have Japan, I think, is one of their more recent ones. And there's some other regions I'm blanking on, but that's been a big growth driver for them as well to kind of expand into new markets. I think Australia and New Zealand's pretty saturated at this point. They're really just getting same store sales growth from here, but there's other markets where they're still opening stores.
There's
Domino's-
also DOM in the UK.
Yeah.
Domino's Pizza in Australia at least is like, there's no other kind of low cost pizza franchise in Australia. There used to be like Pizza Hut and a few other things, but I think they exist on a very small scale now. But Domino's has really just dominated that market. It's either you buy Domino's or you pay up for a pizza.
Yeah,
Wow.
they crushed Pizza Hut.
Interesting.
Yeah, and I think, can you just go to returns on capital and return on equity somewhere, Jack? I think
Yeah.
they have reasonable returns on capital, but they lever it up a bit. So return on equity's higher.
Yeah.
There you go.
Yeah.
Yeah,
So
quite a bit.
they use reasonably aggressive amounts of debt. I don't know what it's like for the ones in the other countries.
Yeah. The US version Domino's definitely has a lot of debt on the balance sheet. Kind of eyebrow raising, if I recall correctly.
Yeah.
So they're at a 14 billion market cap with
About 5 billion in net debt.
Yeah, 19 million EV.
Yeah, 5 billion long-term debt with no cash.
Is that partly just because of the kind of franchise model and as
I
they
think so.
grow the debt? Like as a percentage of the overall kind of book value or equity value over time, I don't think that would be growing. It's probably always the same percentage.
That makes sense. Yeah, it's growing with the cash flow stream. Because it's still a lot of debt no matter which way you spin it. So you got to be comfortable with that. But they are throwing off nice cash flows. And how much was let's go back to the interest cost as well. Yeah, compared to the cash flows, they got plenty to pay back interest. So even with the pretty big debt load, they're handling it fine with the amount of cash flow they're throwing off. But still, something to keep an eye on.
Yeah.
I technically
Right.
own it through Purging Square, but very indirectly. Very small portion, relatively speaking.
A sliver, shall we say.
Yeah, a slice.
Frank, who's
Think
your
you
favorite
love-
Spice Girl? I feel like we were too on track.
I'm trying to think of one of their names, and Posh Spice is the only one. That could be one. Is that Beckham's girlfriend?
Yeah.
Tom must have one.
I'm just asking.
He's looking her up. He's trying to figure out which
yeah,
one.
no,
Is there
I
a
was-
Sporty Spice? Is that a thing?
Sporty Spice. Yeah, I think so.
I was going to go with Mel B. I think I just had to Google it, but she's Scary Spice.
A Scary Spice. What a group.
Wait, I saw something the other day, actually. You might enjoy this.
Should we do a Spice Girls cosplay episode?
Oh God.
I think I'm away that week.
There's
So
5 Spice Girls, 5 Punch Card.
so this is KFC's Twitter.
This is good. This is good.
And if you go to who they're following 11 people, and it's a bunch of people named Herb, and
Mel,
and
And
then
Spice
all the
Girls.
Spice Girls. So they now have their 11 herbs and spices.
Yeah.
That's
wow.
hilarious. Can you go to that following list again? Was Herb Dean one of those?
Yes.
Yeah.
It is. He's an MMA
How
ref. That's
good.
crazy.
So I
Brilliant.
saw that on I
Spice.
think
That is
TikTok
so good.
like a week ago. I'm like, this is great. I had no idea.
Yeah, I think it's been around for a few years. I want to say.
Probably, yeah.
So,
I wouldn't doubt it. But yeah,
Is that the
good
most
stuff.
value you've gotten from TikTok so far, Jack?
There's okay. There's a lot of good entertainment. I will say. Like,
Okay,
I
fair.
genuinely like laugh most of the time.
entertainment.
Yeah. And then when I put together my reaction videos, that's when I try to find the information. And that's where it gets intense. But my own feed, I like it. It's pretty fun.
Good.
Well, a lot of it's like really dumb, but that's the point. So, like, you're just going there for a quick laugh. You gotta be careful with the death scroll. That is a real thing.
Yeah.
That's kind of with any social media.
I find it happening to me even on YouTube. Sometimes I just click
yeah.
on a short and end up scrolling like TikTok.
Yeah, I don't even. I try to avoid YouTube Shorts. I try to like separate my shorts and my long form. So I like, if I want to watch shorts, I'll go watch TikTok or even Instagram. But I try not to like mess up my algorithm in YouTube with shorts. That's like how I look at it. But yeah, even I find myself doing the same thing sometimes. You just kind of get caught in the loop. It's crazy how addictive some of this stuff is. I can't imagine being an 8-year-old with this power and get sucked into the doom loop.
Yeah, YouTube has decided that I like watching 15 to 30-second clips of NBA players fighting. I guess that's what I click on, and so they keep showing that to me.
The shorts algorithm is weird.
So who's the best NBA fighter, Brad?
None of them can fight. I mean, they just kind of
They shove.
Yeah,
I feel like Steven Adams is the good, he sort of breaks it up.
The one
fairly
New Zealand player, he had to call it out.
Aquaman.
Yeah, he just like picks people up and moves them. You know, it's there's no fighting. It's over before it starts. Yeah.
You don't have a favorite fighter?
No.
Meta World Peace.
That guy's scary.
What's that old famous fight? I think it's called something in the jungle. Maybe it's Meta World Peace when he was still.
Oh yeah, in Detroit. Yeah, that was.
What was his name? Was
nuts.
it Ron Artest or is that someone else? That's his.
It was Ron Artest before.
Uh-huh. Malice in the Palace.
That's the one. That's the one. And they're in the crowd. That was crazy.
That was nuts. Yeah.
Guys, I don't know if we're gonna save it for a whole other episode, but one of these days we should react to some old YouTube videos.
That sounds like a great idea.
We've been talking
do we
about
save
this
it?
behind
Do
the
we
scenes.
do one now? I don't...
Do you have one in mind?
Pull up Malice in the Palace.
Oh, hey, whoa! I don't want to get copyright stricken here. we gotta vet these.
We're gonna get demonetized, Frank.
Reaction content is allowed. We're reacting.
I know, but
to
all it takes is a strike. Then we're protesting for 2 weeks, and then they're like, it's fine.
Oh, I don't want to lose that $3 of income.
Like that's our. How do you think we pay for these StreamYard fees? It's
super chats. It's the
super
tips
chats
that matter.
and ads.
Yeah.
Yeah,
we definitely need to react to how to buy a house cash one of these days.
I love that one. You got some serious views on that one, Brad.
I know. I wish they would. Part of me wishes they would stop.
It's so different than now. I love it.
Yeah.
That would be fun. Looking at some old videos from each of our channels.
Yep, we should do that. We should spend some time on that next time.
My rule of 72 first video is pretty cringe.
That's a
as
good
well.
one.
chill.
It's through the
It's so-
park, right? We're going through the park.
Yeah,
With the
sunglasses
sunglasses.
on.
That's good.
Yeah.
I don't know if
Cool.
I have anything that's like really cringe, but definitely just kind of.
I'll find something for you.
I have a
Jack.
lot
I'll
of like
find something.
uninteresting stuff like, at the beginning, but I wouldn't call it cringe.
Like deer in the headlights, maybe. Maybe we can
Yeah,
find something like
it's
that
more like
for you.
it's very uncontroversial stuff, and like
Yeah.
it's kind of I was just starting. I was like, what do I talk about? I got to get all like the basic finance stuff in there, right? For
Sure.
you pick some more nuanced things.
Yeah.
Mm.
Yeah, it's a good idea though, Tom. We'll pursue that at some point.
Okay. One of these days.
I do have my like short series that I did more recently with my robe on. Those could be good. But those are too recent.
Yeah.
We need something old that I forgot about.
Can we pull up Tom walking through the park now? That's one of the best videos.
If
on
Tom's
YouTube.
all right with that, we can close with that.
The glasses
Go for
on,
All right, I'll pull it. I'll pull it.
It's so bad.
the business shirt, glasses on in the park.
It's so bad it's good.
That was
Tom.
I don't know if that was a work shirt one, was it?
I don't know,
There are some early videos where I got the full button up shirt going.
Right. Tim likes the
Someone-
robe, Jack. Tim likes the robe.
Yeah.
I've been meaning to do some more of those. They're fun, but I gotta like write a script and everything. All right, here we go. I got Tom.
Man,
I
I
have
don't
to
even like watching my own new videos, let alone the old ones. Here we go.
Hold on,
Someone-
I gotta reshare so I can get the audio.
Someone tooted their horn at me halfway through filming this first video.
Is
I was
it in
walking
there?
down the road holding my. No, I had to re-record that.
Oh, they messed up the whole
I
thing.
remember that very distinctly. Yeah.
That's so sad. There's our man.
Yes.
Oh man, that's the
So
date on
good.
that, October.
2018.
Oh,
4
no
years.
beard or anything.
So good.
Oh, this is gonna be bad.
It's only a minute 50, thankfully. All right. I hope the audio is all right here.
Hello, YouTube. Welcome to the very first video on the Investing with Tom YouTube channel. My name's Tom, and we're going to talk about investing. So, as a quick little intro
The
to the
cut
channel,
too.
one of the things I thought I'd talk about is just to give you one of my favorite quick little hacks in
On a
investing.
soccer field, is it?
And that's something called the Rule
Yeah.
of 72. So, for those that aren't aware of the
Oh,
Rule of
changed hands.
72, it's a
I
rule that
love
can
it.
be used to figure out
It's
how
so
long
raw.
it would take you to double your money given a certain rate of return. So the way it works is that you essentially just take 72. Don't ask me why it's that number. It's
Don't
it just
ask me,
works.
guys.
And
Tom, why is
you
it?
divide 72 by your rate of return. That gives you the approximate amount of time it will take you to double your money. So for example, if you make a 10% return per year compounded, that should take you a little over 7
This
years
is
to
quality
double
finance
your
content.
initial
Okay.
investment.
Yeah.
So the other way that this rule can be used is to figure out what rate of return you actually made if you have made an investment which has actually doubled your money. So the way that works is you can take
there it is.
72
Hey, there's
and
the horn.
divide that by your
I thought I edited that-
period of
edited
time
that
that it
out.
took you to do that double, and that will give you your approximate rate of return. So, for example, if you invest over a period of 5 years and double your money, simply divide 72 by 5, and that gives you an annual rate of return of around 15%. And so there you have the rule of 72. So hope that helped you guys out. First video on the channel, so I'd really appreciate it if you gave this video a like, hit subscribe, and I'll see you next time.
Hell yeah.
Nice. I'm gonna go like
that
that
was-
video right
was
now,
art.
Tom. That was good. That was good.
Man.
Can I get the reasoning for why were you walking through a park? What was the thought process there?
So
You won't sit down
okay,
somewhere, I'll
Take
just
us
walk through the
back.
park.
yeah.
Shaky
So
camera.
what would have happened is I would have got home from work and would have been just me and my girlfriend at home, and I was like, somewhere in the mix, I got the idea to start an investing YouTube channel,
Uh-huh.
and I thought it's going to be way too cringe if she's like sitting on the couch and I like go to the bedroom next door and just start talking to my phone about something. So I was like, so I went. I don't know. I just went down the street, walked through the park. I'd seen another guy, so I I used to compete in powerlifting, and there's a Australian powerlifter called JP Couchy, and I used to watch him a lot, and he had I don't know, he had YouTube videos when he was just walking down the street. So I was like, that seems to work. Let's do that. And yeah, there we go. I've got a few videos in the park.
It's wholesome quality content. Like, it's not like you said anything wrong. Just the delivery is just legendary.
Yeah.
It's a valuable
it
video.
actually is
It's
cool
funny.
seeing like the full progression as Tom levels up.
Well, Tom, I'm looking at some of the older ones. I noticed you have a whiteboard behind you in some of them. I feel somewhat vindicated with my buying a house with cash video.
Yeah, and the whiteboard was really small, and
Yeah.
I don't know, was using pens that wrote with like real they were real
Yeah, you
like
can't
narrow
even see it.
writing,
Yeah.
couldn't read it.
Mhm.
There's one video, I don't know if you'd be able to find it or not, but there's one video where the whiteboard literally falls off the wall mid-video, and I kept it in there, and then I stuck it back on.
I love this thumbnail here. I can't really zoom in on it. It's like it looks like almost like a work picture, and then
Which one's that? I think I'm at a wedding or something in that one.
The thumbnail game has improved.
Yeah. There's
one
fully
with the
like
eggs.
The whiteboard is
read
really
it.
small. That's hilarious.
yeah. There are
To
videos
to your credit, like trying to figure out how to film a whiteboard is actually so difficult because of like trying to get the lighting right so there's no glare, and then getting the angle right so you can actually see it. Yeah, it's actually not that easy.
Yeah. There's multiple videos because I don't know what I was doing, but I still don't know what I'm doing. But I was I didn't like mount the whiteboard properly. I'd put it up for a video, and I think I was literally like blue tacking it onto the wall or something.
Wow.
and you'd see in heaps of videos it would like, because it fully fell off one time, and I kept that in there. But there were multiple times where it would like, one side of the whiteboard would slowly start to dip, and so I'd like stop filming, turn around, and like kind of push it against the wall to like stick it back on and line it up again, and then carry on.
Humble beginnings, Tom. Humble beginnings.
This got put in the shorts feed. Your 100 subscribers.
Yeah, I got
you got 1,000 views on this guy.
I think it's because it got randomly turned into a short, because I got that suggested to me a few weeks back, maybe.
I clearly watched it. I have like I clearly watched it recently because it's on my red bar.
Yeah.
I don't remember watching it, so maybe it was one of those death spirals in a short feed.
Yeah. The other funny thing I find watching these older videos is like the bookshelf slowly got fuller and fuller. I think of the first video, I got like 2 books on there or something.
See, that's great. That's great.
Slowly more and more.
Oh yeah,
but I'm on to the next shelf now, so you don't really notice new ones anymore. But,
nice. Yeah. Cool. Well, should we let these guys go, Jack?
That was good and wholesome. I think that's a good place to wrap up.
Yeah.
It's fantastic.
So
you know, it's good. You didn't have a past life as like a charlatan or something, and now you're doing wholesome content. It's always been wholesome, and that's what we like to see. So nice job, Tom.
Appreciate it.
With that said, everyone, please like, comment, subscribe. All that great stuff helps the channel out a lot. Happy birthday to our man Frank. We're so happy that you could join us on this special day, even interrupting your lunch unexpectedly.
Can we get some birthday music on the way out here, Jack?
I'm not prepared, and it takes kind of a second to set up. I had it on the intro, so I mean you can go back and replay maybe. Let's get some happy birthdays in the chat while we close out. Check out our links to share site, Seeking Alpha. You get some discounts there using our links. That helps us out as well. And check out the Discord too while you're at it if you're not already in that. We have a lively chat in there, new stuff every day. So go ahead and check that out. If you haven't already, we got quite a few of our viewers in there, which is great. Otherwise, that's all I got. So till next time, everyone. See ya.